Thanks for joining me. I'm Mike Garbett, President and CEO of Clean Air Metals, and I'll talk to you today about the Thunder Bay North project. I will be making some forward-looking statements that have known and unknown risks, so please be aware of that throughout the presentation. So the Thunder Bay North project, we are about 40 kilometers northeast of Thunder Bay, Ontario. We have a fairly large land package, 300 square kilometers, includes 5 intrusions, 2 of which form our resource. And the paved provincial highway goes through the one part of our claims, and a 230 kV power line goes through the other part of our claims. So we're very close to infrastructure. We are also on the lands covered by the Robinson Superior Treaty of 1850, and that includes the territories of Fort William First Nation, Red Rock Indian Band, Binjadawabi Zaging Anishinaabe, and Kiashki Zaging Anishinaabe. Those 4 communities are an integral part of our project plans, and all 4 communities are very open to participating in the project in some fashion, and we value their relationship. So our asset, as I mentioned, we have 2 intrusions that form our resource. We just put out a resource statement late last year. It's a 14.9 million indicated resource. We have also 2.4 million inferred material at the lower part of current. So over 200,000 meters has been drilled historically. These assets were found in the early 2000s, and Clean Air, they came into Clean Air's fold in the middle, early 2020. All told, about 2.3 million platinum equivalent ounces. So the 2 deposits, current deposit, close to 9 million indicated, and you can see the grades there. 6 payable metals, so it's primarily platinum, but we have payable amounts of palladium, copper, nickel, gold, and silver. And then the escape deposit, generally the same grades, higher copper tenor, and I'll talk to a bit about the opportunity that the escape down plunge brings. You can see on here I said it's open down plunge. I'll speak to that a little bit later on. I'd like to talk a bit about platinum. There's not a lot of big platinum stories out there. We're not a world-class platinum deposit. We're a very good deposit, very good buildable asset. The platinum market, without getting into the details, struggling on the supply side, and a lot of it has to do with supply from South Africa, primary mining supply for a number of reasons, some of which is geological, but also recycling, which has been the concern around PGEs. Recycling hasn't got its act together, 15-year low, struggling heavily. But the exciting thing about platinum is the demand side, high utility. Everyone talks about catalytic converters for platinum and palladium. That's part of the story, but hybrids and plug-in hybrids have a considerable higher loading of platinum and palladium than the internal combustion engine. So all you need is a raise in auto sales back to pre-pandemic levels, and you're in trouble. It's a small market, only 8 million ounces globally for platinum, and they're already a structural deficit of 800,000 ounces for next year. The big one that's seen the price, though, it's behaving like a precious metal again, and it's a cheaper store of value than gold. It's taking off. Asian trading markets suddenly opened it up to physical platinum, palladium. That's driving a lot of the price changes, but it's got a very strong utility, and that's why the fundamentals for platinum moving forward gives us tons of confidence. Really quick, everyone knows, I think platinum hit 2,900 yesterday for a bit, but we also have payable copper, and palladium's doing well as well. So our suite of metals putting us in a really good position. Apologies for the small writing, but we put out a PEA last year, late last year. It focused on toll milling, and I didn't talk about it, but we're about 65 kilometers south of the Lac des Îles asset owned by Impala Canada, 12,000 ton a day mill. They're only mining 7,000 ton a day. So there's unused capacity there. RPA looks at about 2,500 ton a day mine. Most of that capital is tied up in lateral development, very minimal infrastructure. So our capital cost under $100 million. And at study pricing, post-tax, pre-tax is really good, but let's post-tax, 158 million NPV and 32% IRR. Not even using today prices. So we use January 26th spot prices, our tiny little asset, we're looking at a $500 million NPV. So, I mean, it's almost embarrassing to talk about these prices nowadays, but it is what it is, and we're going to want to take advantage of that. This is a buildable asset, and if you look at the value drivers on the bottom, we don't talk enough about copper. 30% of the value of this asset is tied to copper, 60% platinum palladium, and the division is about 35% platinum, 25% palladium, just for reference. So for the future mine, large blast hole, open stoping mine, 2,500 tons a day, reasonable grades. For the toll milling, we're looking at going after higher margin material, but this year we will evaluate a mill option, which will lower that grade and open up more material, because having our own mill should lower operating costs. So that's the development side. On the exploration side, some of you that have been following us for a bit, we did some drilling, and if you look on the inset on the bottom right, showing where we are in the two deposits, that's a plan view of the current and the escape deposit. So in the upper part of the current deposit, we did some drilling to expand some of the high-grade ballrooms, and we're very successful at doing that. Just if you look at some of the grades on here, I think we had the second highest PGE intercept in North America last year, drilling some of these, expanding some of these ballrooms, expanded some of them by 50, even 100%. So it didn't add a whole lot of volume necessarily to our resource, certainly added grade. There was more opportunity to drill more of these and identify more, and that is the second priority from an exploration standpoint. The top priority for us is the escape down plunge, as I mentioned before. So at the escape down plunge, you'll see the known resource is shown in red. Beyond that, we had a magnetic anomaly. We did some passive seismic survey. Dr. Lionel John, our VP of Exploration, expert at Mid-Continent Rift PGEs, identified some new targets by looking at some old magnetotelluric sections, and we could show them on there. So there's 3 targets. We had a bit of flow through left over. We said, let's drill one. We had enough for one hole, drilled the hole, and hit 50 meters of mineralization, almost 400 meters from the known resource. It's almost unheard of at a depth of about 350 meters. So we do need to follow up on this. We're going to add some more sections of magnetotellurics this spring or late winter, and drill off a couple of more of these targets, with the idea that we want to actually demonstrate there's some real potential for scale beyond our 15 million ton indicated resource. This is almost the same length as the entire escape deposit. So we're very excited about this. The outlook for project development, and I keep telling people, look, you're not going to get a regular amount of news flow from drilling from us. We will drill what we need to. We don't want to spend money we don't have to, and we will spend money on project development. So on 2026 objectives, looking across the top, one of the key things is doing advanced exploration permitting. And what that will allow us to do is drive a ramp from surface to the deposit, which will take within 4 months, within the mineralization, and allow us to take a bulk sample, which is key if we're moving down the path of toll milling. That'll allow us to do a good sample for toll milling. Beyond that, we do need to do a bit of metallurgical testing for toll milling. We want to prove that up, maybe look at optimizations. And then the second part for moving the project forward, we will do a study, likely a pre-feasibility study on owning our own mill, a milling-focused study, pre-feas. And at the same time, we are going to advance our knowledge about toll milling, as I said, with culminating in a decision on which path we're going to move forward by early 2027. Further to that, we already talked about, we're going to test that down plunge, and we're also going to do some design work on the power line and the road, and some of that early work's being led by First Nations for determining the correct path for both. Our team, we have a fairly small team, but certainly a team of doers. I already talked a bit about Dr. Lionel Jean, Mid-Continent Rift PGE expert. We stole him from Impala, Canada. He was the exploration manager there and has just been absolutely phenomenal in looking and redesigning our exploration program. And then Chris Tudela, he's our VP of Sustainability. He's got tremendous amount of experience in permitting in the province, and is excellent with First Nations relations. These two are vital to advancing this project. And our chairman, Jim Gallagher, former CEO of North American Palladium, which owned Lac des Îles, that was up the road, and before they sold it to Impala, he leads with a steady hand. Our current capital structure, we have about 250 million shares outstanding. Our market cap hovering around 26. We've seen a significant improvement since the middle of last year. We lost a lot of institutional investors when palladium dropped by over 70% in the last 3 years. We do have to raise a bit of money to do this work, and we've been taking our time and really looking at building that share structure back. We don't want to spend too much money. We're going to do the right work to move this project forward in a meaningful way that could attract the attention of strategic companies, perhaps the Sibanye-Stillwaters of the world. So that's our goal. We could try and build this ourselves, but it's a road fraught with risk. So we are doing the right work. We're trying to worry about dilution and getting these shares in the right hands. So there's a summary of, I'll go through real quickly of why we think the investment case, that the PEA shows there's a very strong case for investment. It's not a huge asset, but it's of high value, high margin. The resource is an excellent resource. I'm not going to lie. People talk about their world-class resource. This is just a really good resource in a really good jurisdiction that's buildable. Has some really good grade and potential maybe to increase that grade. But we have the potential for scale. So with a really good primary platinum asset, also has a potential for scale. That potential could be realized and get the interest of some strategics. I already talked about the team. The improved outlook for PGEs, I feel a bit vindicated. We've been talking about a while about the fundamentals are there. It's here now, and it's time to move the project forward. And I put the last slide, the regional PG opportunities in this area of northwestern Ontario. If you have a mill, you have the opportunity to build some real scale. So that's why we're going to look at this pre-feas and maybe build our own mill and take it ourselves as opposed to toll milling.